Tesla reported its highly anticipated quarterly financial results and held a conference call with Wall Street analysts that tends to get more attention than its actual financial analysis and financial figures that the company reports. That's because the management team provides insights into its future products and pipeline of future products that gets investors really excited about the company's prospects. I'm going to go over those details with you in this video and what it could mean for Tesla stock investors. Let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Elon Musk noted it in the quarterly conference call with Wall Street analysts that they feel like they've got clarity on unsupervised full self-driving, saying, I feel like we've got clarity and it makes sense to expand production as fast as we reasonably can. And that's really the primary reason why Tesla stock is trading at this super expensive valuation. It's trading at 30 times more expensive valuation than other car companies. So it's already incorporating those prospects into the share price today. It's not like investors are unaware of the company's driverless car ambitions, and they've already anticipated the success of that product and already priced it into the valuation today before the company actually gets approval and actually launches and actually starts producing the Cybercab. It's already reflected in the valuation today because investors are already hopeful and already in belief that the company will succeed in this endeavor. They're also finding great success on the energy segment. So they're saying they're making a huge impact on the energy sector with battery storage, with both the Powerwall and especially the Megapack. We are dramatically improving the ability to generate more energy from the grid. And this is becoming even more important as artificial intelligence increases its effectiveness, because more and more enterprises, institutions, and governments are adopting artificial intelligence, which requires significant computing power, and that's draining the grid of all the energy. And so energy is a constraint to the expansion of artificial intelligence. If we can increase energy availability, we can increase the ability of artificial intelligence to improve productivity for more and more individuals. And Tesla's energy segment has the products to enable that for several areas around the world. So the CEO is pointing to version 14 of self-driving and highlighting, telling investors to go see the reactions of people online. You can get version 14 if you just select, I want the advanced software in your car. And in an over-the-air update, you can get an improvement of your supervised self-driving in your vehicle. And that's one of the best things about Tesla cars is the continued enhancement of the vehicle's capability through over-the-air updates. That's one of the reasons why Tesla has become one of the best car companies in the world. So the Megapack 4, which will incorporate a lot of what normally is in a substation, is going to be able to output a lot more energy than is usually the case. And investors are very excited about the company's energy segment. Overall, everything outside of the core business of Tesla, which is selling electric vehicles, that's where it generates roughly 80% of its revenue right now, and most of its profits, that's where it comes from right now. Everything outside of that core business is in a good position, right? The energy segment is growing really nicely, but it's still a relatively small part of the company's overall business. The driverless car ambitions are progressing, even though not at the pace that Tesla would hope. It's still progressing. It's moving forward. It's making advancements, and it's a massive total addressable market opportunity, which keeps growing. So those are working well. Unfortunately, the core business, where 80% of its revenue and most of its profits are coming from electric vehicles, that segment is under significant pressure, especially with the removal of the tax credits in the United States. That segment is under significant pressure. That being said, the company is seeing some signs of success in Greater China and APAC, which is Asia Pacific. Sequentially, sales were up 33% and 29%. North America was up 28%, and Europe, Middle East, and Africa was up 25%. In the most recent quarter, they reported not a surprise, but an increase in deliveries, most notably because people in the United States were rushing to get ahead of the expiration of those tax credits on September 30th. So people went in and bought those vehicles before those tax credits expired. That being said, the next 3 months are likely to experience a significant sequential decrease in sales as a result of all the people that rushed in to buy those vehicles. We're expecting a big decrease sequentially in sales in the upcoming quarter. So Tesla's management team saying that they're now operating the robotaxi in 2 markets, which is in Austin and most Bay Area cities. They've still got employees inside the vehicles in both Austin and the Bay Area. In Austin, the Tesla employee is in the passenger seat, which they still exercise control over the vehicle when they need to. And then in the Bay Area, there's a Tesla employee in the driver's seat. So even though they're calling it driverless, there's still a Tesla employee in these vehicles. In the early test stages, Tesla is being extra cautious, and I think that's a prudent strategy. I think that's a smart strategy for Tesla to undertake. Tesla understands that investors already expect this rollout to be a lot slower, but if there is a huge incident, that could be a big negative on the share price. And so they're moving forward extremely cautiously and extremely slowly, which I think is a smart strategy from Tesla for this rollout. So I was surprised to see that all paid FSD customers is still small. It's around 12% of their current fleet. It's still not available in places like China, Europe, Middle East, and Africa. So they're still trying to get approvals in those regions. But even still, I was surprised to see such a small percent of overall Tesla vehicles that actually of people actually paying for full self-driving or supervised self-driving. And I think that should be looked at when you're trying to consider. There's a lot of promotion online. You could go around and see a lot of people highlighting just how much they love their supervised self-driving. They say it takes them to work and back and they never have to drive. But I think this number puts it into really good context that it's not for everyone. It's a relatively small percentage that benefit from this, that works well in whatever area and region you're at, especially compared to the price you have to pay and the value it brings. How much really would you be willing to pay for this supervised self-driving, even if it works really well? I'm curious to hear in the comments section how much you would be willing to pay for this feature, because I think it's really cool. The supervised self-driving, I mean, if it turns into full self-driving where I don't even have to sit in the driver's seat and I can sit in the back seat and I can be confident that it's going to work and there isn't going to be an issue, I can see myself paying a little bit more. Um, but I don't know how much more I would be willing to pay. I mean, I'm in the car anyway, and so it's not that much work to actually drive the car and instead of just sit in the car and not drive. Like, how much would I be willing to pay to not have to do this in my drive? For me, I wouldn't see this as a big opportunity, but I know for many folks it can be a huge value add, especially if you have to commute to work, you know, an hour each way. If you're in your car 2 hours every day, then I can see this being something extremely valuable for you, because that can be exhausting being in your car and having to drive. At least if you're not, you can just kind of close your eyes and take a nap after a long day of work and your drive home. I can see that being extremely valuable for those of you that have that. So I'm curious to hear your thoughts. How much you would be willing to pay if your car can be turned into a full self-driving car where you don't have to drive at all. It will drive you and you can just take a nap in the back seat. Hey, if you value my process for researching stocks, I think you'll appreciate access to my spreadsheet containing my discounted cash flow valuations, which calculate a fair value for over 200 companies. It answers the question, what's a good price to pay for a certain stock? You can get access by joining our channel at the investor tier or above. See the link in the description or click the join button below to learn more.